The S&P surged 2.3% yesterday to its biggest rise since March of this year, following Federal Reserve Chairman Jay Powell's comments that it looks like the Fed may be taking a dovish posture for the rest of this year and possibly even into 2019. What does this mean for our portfolios, and how is that going to affect what happens in the markets the rest of this year? Do you know what's in your portfolio? If you don't, you should. If you want to know, we can help. I'm Charles Brown, and today is Thursday, November 29th, and this is CB3 on 3. My last three videos have talked about the current market correction, the one that began at the very end of September and is now continuing here through November. The deepest correction of this year actually occurred in January and February, and we showed you those charts in those last three videos that I did. This downturn actually has been less than that, even though it never feels like that at the time. So the reason I'm producing this video today is for you guys to see that what's happening in the market right now, I believe, is the bottoming process and the end of this second correction here in 2018. Yesterday, again, the Dow made a huge move up based on Chairman Powell's comments, and that move is continuing today after the market actually opened down overnight. So what I'm looking to see now are, on the technical front, we want to see the S&P 500 close above its 200-day moving average, as the Dow has already done, and then we want to see the NASDAQ and the Russell follow that. We'd prefer to see the Dow always leading, or certainly the Russell leading, because it's the small cap index. So what we have seasonally in our favor, though, right now, is what's called, you've probably heard this term, the Santa Claus rally. Typically, the time from Thanksgiving through the middle of January is one of the strongest periods of stock market performance. And we're seeing that possibility, based on what happened yesterday, could be occurring right now. So the lows from February and April have held. The low from October has held, and the market has not gone back to take out that low. So fundamentally, we have good economic data. The fourth quarter earnings, of course, will be coming out in January, but we're still at the very end of the third quarter earnings, and those have been every bit as strong as the previous earnings cycles that we've seen this year. Politically, well, the G20 is in front of us, isn't it? And President Xi and President Trump, China and America, the two biggest economies in the world, are going to be battling it out to see if they can keep their noses on straight with these tariffs. The tariffs, in many people's view, are an absolute requisite to getting more of a fair balance of trade between the two greatest economies of the world. And right now, we're waiting to see what happens, and I'll have more for you the next time we produce a video. But for the moment, it looks like the low of the stock market in this corrective cycle is in, and I'm pleased to see that right in front of shopping season. And that's CB3 on 3 for Thursday, November 29th. Do you know what's in your portfolio? If you don't, you should. If you want to know, we can help. I'm Charles Brown, and at CB3 Financial Group, we don't just manage your assets, we become one of them.